Good morning, friends. Today, on 16th of July early morning, we are recording this video. This is the fifth video in our Fortnightly Market Outlook webinar series. As usual, I will start with the international events, how global markets and local markets have behaved over the last fortnight. Then I will invite my colleague, Subhash, who will share his views from the technical perspective. And afterwards, we will invite Siddharth to share his insights from the derivative markets. In the end, we will discuss the way forward. We have released a strategy note, as many of you will remember, in the middle of June on how to navigate the volatile markets. We'll discuss that and the performance and the recommendations over the last fortnight. So let's directly jump into the key events which have shaped the international markets. Inflation is the talk of the town. Central bank policy and inflation are in their driver's seat over the last fortnight. We saw that the US CPI has come in at 9.1%, which is the 41-year high. And one of the most important component of this inflation is the energy prices. It was up 42% YOY and almost 7.5% high from the month of May. So that is the big concern for the US market. Now, why we are not worried about it and why we expect that this inflation is high, but it has peaked out, and in July the inflation is likely to be lower than the June, is because one of the most important component of this inflation is the oil prices, and oil prices have started declining. Now it is trading near 98. It has briefly touched the 91. So from 120-30 levels, it has started coming down. Gasoline prices are at the US pumps are low, and natural gas is also down by 28%. Copper is down by 34%. Lumber down by 62%. Wheat is down by 44%. Let me show you some charts. So this is the gasoline prices at the US petrol pumps. It has come down from 4.93 to 4.3. So this is the wheat prices. Now they are back to the level before the Russia invaded Ukraine. So these are the reasons why the inflation are likely to tend lower, and though the headline inflation is high, markets have discounted it. What is more important is that the on 27th of July, let's look at the calendar. So on 27th of July, we will have the FOMC rate decision, and markets earlier started discounting a full 1% increase in interest rates, but now it has settled back to 75 basis point interest rate hike. So this high interest rates and big hike in interest rates 2 weeks from now is likely to lead to a lot of volatility. Even if the inflation is peaked and it is coming down in July, it will be nowhere near the Fed's 2% target anytime soon. So even after the interest rate hike in the July meeting, Fed will have to keep raising the interest rates in August and September, and that may lead to its own worries. So what are those worries? Worry is that if US continue to keep interest rates high, then it may lead to recession. The treasury markets are actually suggesting that US may go into recession. The 10-year and 2-year US yield curve, whenever it goes into the inversion, we see that the recession follows. So it has happened into history 4-5 times, and all the time when the yield curve went into the inversion, the US has entered into recession, and the yield curve started inverting. So there is a possibility that US may go into the recession. So this is a big worry for the economists. Now, why markets are not so worried? Because over the past 4 decades, the stock market actually went on rising even though the yield curve inverted. But this time, as we have seen in the prices, US markets have already gone down, have corrected, and they are much lower than what it was at the peaks. So stock markets have already discounted much of the economic slowdown which is happening. Emerging markets have not given any returns. So even if US were to go into the recession, emerging markets may not get affected that much. There, the forex reserve and the balance sheet of the countries are much better this time compared to the previous US recessions. So it is a worry, but it is not a big worry which may lead to collapse in the markets now. Let's look at the international markets and Indian markets over the last fortnight and last 1 month. So as you can see from the screen, over the last 1 month, US markets have gone up about 2 to 3%, and same is the case with the Indian markets. Our markets are also up about between 2 to 3%. The mid cap and small cap have started outperforming the broader market. Over the last fortnight, US markets are more or less flat. Nasdaq has gone up by 3%. Similarly, Indian markets, the Sensex and Nifty are up about 1.6 to 1.7%, but mid cap and small cap have started outperforming. So, as we predicted in our last fortnightly market webinar, we are expecting mid cap and small cap to do better than the Sensex and Nifty, and that is what is happening in the market. So, focus should be on the stocks. It should be stock specific investments rather than looking at the broader markets now. So, what sectors are contributing? Now, many of you may remember that we pointed out that we are expecting consumer durables and especially power to do well, and that's what has happened over the last fortnight. Power sector stocks have done well. The metal continue to underperform. If you see over the last 1 month, metal and IT are the worst performing sectors, and we can expect some kind of investments to come in into IT sector as the those stocks have corrected. IT stocks are down about 5% over the last fortnight, and this should be considered as a good opportunity to start accumulating IT stocks over the next fortnight. So one of the key factors which determine the returns over the asset classes is the currency. And as you can see, Indian currency is weak, but it is not as weak as other counterparts in the emerging market. And in fact, European markets, Indian currency has been fairly stable. If we see the chart of the dollar index, if we see that the dollar against the six major currency has been strengthening a lot, and that's why most of the currencies around the world are weak, as you can see from this chart. Indian currency has stabilized, and we don't expect this weakness to continue. We expect once the interest rates are hiked in the US in the end of the July, the depreciation may stop. Okay, let's look at some important international charts quickly. So after making a low at 3636 at on the 17th of June, US markets, the S&P 500, which is the one of the most important market, the mother market of all global markets, they have started building some base. It is now in range bound between 3940 and 3700 levels. So if US markets were to break this 3900 level and goes higher, then we can say that the short-term downward trend which started from the month of March will get broken. If for any reason markets were to start going down below 3700, then it will be considered as a breakdown. Let's look at the other important instruments. Let's look at the gold. So commodities are in a severe downtrend. Gold is in downturn. Silver is in severe downturn, and in fact, copper is also at a multi-month low. Now, let's invite Subhash to share his insights from the technical charts perspective. Over to you, Subhash.
Good morning, everyone. This is Subhash. I'm a senior technical and derivative analyst at HDFC Securities. So today I'll be giving you a weekly perspective on the Nifty and the overall Indian markets based on a technical analysis perspective. So the markets corrected marginally this week after the hefty rally seen in the previous week. The Nifty managed to hold above the 20-day simple moving average and also closed above the 50-day SMA on Friday. 14-day RSI of the Nifty 2 is in rising mode after recently making positive divergence signals. If we look at the 60-minute intraday chart, we can see that the Nifty has broken out of a downward sloping trend line, thereby ensuring that the short-term trend remains up. On a week-on-week basis, the Nifty has however ended 1.06% lower. Market breadth was positive in 2 out of the 5 trading sessions of the week. Intermediate trend is however still down as the Nifty continues to make lower tops and lower bottoms over the last several weeks. So this intermediate downtrend will reverse only on a close above 16,794. As we can see on the Nifty daily charts, the Nifty has been making higher bottoms over the last few weeks. And on Friday, it closed above the 50-day SMA. It also continues to trade above the 20-day SMA. On the weekly charts, we can see that the Nifty has been making lower tops and lower bottoms for the last several weeks. And it needs to cross these previous intermediate highs of 16,800 for the intermediate downtrend to reverse. Sectorally, it was a mixed bag this week. The top gainers and outperformers were the Nifty Energy, Pharma, Realty, Oil and Gas, and Auto indices. The top losers and underperformers were the Nifty IT and Bank Nifty indices. On the daily charts, we can see that most of the sectoral indices are in short-term uptrend and could therefore rise more in the near term. For example, Auto, FMCG, Realty, Energy, and Pharma indices, all these indices are in short-term uptrends, and we expect them to continue. Auto sector closed at a new lifetime high this week and could continue to outperform in the near term. As you can see on the charts here, this is the Nifty Auto daily chart. The index has closed at a new lifetime high, and 14-day RSI 2 is not very overbought, suggesting there is more upside potential. Bank Nifty was an underperformer this week, but however, it is now near the supports. It's near the 50-day SMA and could bounce back and perform well in the coming weeks. IT remains in an intermediate downtrend and could therefore remain an underperformer for the near term. Coming to the outlook, Nifty is still in an intermediate downtrend, but the short-term trend remains up, implying that we could see more upsides in the near term. Upside targets are at 16,525, which corresponds to the 200-day EMA. And these targets are likely to be achieved once the immediate resistance of 16,276 is taken out. We expect buying across many sectors to help push the Nifty index higher in the coming 1 to 2 weeks. Broad market indices like the Nifty mid cap and small cap outperformed this week as they gained 1.33% and lost 0.07% respectively. So we expect more stock-specific opportunities in both the mid-cap and small-cap segments for the next 1 to 2 weeks. So we expect the markets to rise more in the near term as the short-term trend is up. And as mentioned earlier, our upside targets for the Nifty are at 16,525 once the resistance of 16,276 is taken out. With most of the sectoral indices in short-term uptrend, this increases the probability of a further up move in the markets. Current short-term uptrend would, however, reverse if the recent lows of 15,858 is broken. So these are the crucial levels to watch for the coming week. In terms of strategy, we recommend a stock-specific approach by looking for stocks from outperforming sectors and showing relative strength. Thank you, everyone.
Thank you, Subhash. Now let's invite Siddharth to share his views from the derivatives perspective. Over to you, Siddharth.
Good morning, friends. I will be covering derivative part today, mainly focusing on Nifty future, Bank Nifty future, then their open interest data, followed by PCR ratios, IV, and then we'll covering FI long to short position. Then we'll go towards the stock specific approach, then sector specific. Let's start. This is a Nifty future chart on a 5-minute candle of last 1 week, where we can see Nifty is making lower top, lower bottom with a rise in open interest, suggesting a build up of short position over the last week. But if you see the Friday's data of last 1.5 hours, we can see build up of fresh long position in Nifty. So there is a possibility that if Nifty sustain above 16,000 level, then Nifty can move towards 16,200 level, which is a major resistance area of last week. After crossing the 16,200 level, we can see a 16,500 to 16,600 level. Currently, IV is also falling. We suggest a lower option premium for the coming week. PCR is currently trading at 1.21 level, which is neither overbought or oversold. This is a Bank Nifty chart of last 1 week based on 5-minute candle, where we can see Bank Nifty is making lower top, lower bottom with a fall in open interest, suggesting long unwinding of position in Bank Nifty future. You can see the fall in IV prices also, which suggests that the lower premium of the option in the coming sessions. If you see the last 1.5 hours data in Bank Nifty also, we have seen a rise in price with a rise in open interest, suggesting a fresh build-up of long position in Bank Nifty. This is a Nifty option data analysis. In the put option, we have seen maximum build up around 15,800 to 16,000 level, suggesting a support around this level in the near term. In call option, we have seen 16,500 to 16,600 as a maximum open interest, suggesting a resistance around this level. So if Nifty sustains above 16,000 level, then Nifty may head towards 16,200 level, followed by 16,500 to 16,600 level in coming sessions. This is the Bank Nifty option data analysis, where we have seen a major build-up of put option around 34,500 level, followed by 34,000 level. So if Bank Nifty is sustaining about that 34,500 level, then we can expect a Bank Nifty heading towards 35,000 level, where the maximum call rating is happen, followed by 35,500 level, where the next maximum call rating is already happened. This is a sectoral open interest data analysis. In this, we have seen automobile, telecom, capital goods saw build up of fresh long positions, whereas technology and metals saw build up of short positions in the last week. So we can expect automobile, telecom, capital goods sectors to perform in coming weeks, whereas technology and metal can underperform in the coming week. This is a heat map of last 1 week's data, where we have seen a build up of short position in HCL Tech, NMDC, TCS, where we can expect this stock to underperform in coming sessions. We have observed short covering in Loris Lab, DLF, NTPC and Apollo Tyre, where short covering has already happened, so there is a possibility that stock can move higher from the current level. We have seen a fresh long build up in Indus Tower, Granules and Crompton Gibbs, which can outperform the overall indices in coming session. We have also seen a long unwinding in Infosys, REC and HDFC MC, where we can see a further short build up position in coming sessions. Currently, we are seeing FIS long to short ratio in index future. Currently, it is trading at 0.2 level, which is extremely oversold level. So there is a possibility that from the current level, we can expect a build up of fresh long position by FIS in coming weeks. Now we are coming towards outlook for the Nifty and Bank Nifty future for the coming weeks. Although we have seen a build up of short position in Bank Nifty future over the last week, there is a possibility that Nifty will move from higher from the current level itself. If we check the Friday's last 1 hour's data, we have seen a fresh build-up of long position in Nifty and Bank Nifty also. So there is a chance that Nifty will move towards 16,200 level, followed by 16,500 to 16,600 level. Now Nifty has a major resistance around 16,200 levels. So if Nifty crosses that level, then we can expect a 300-400 points in Nifty, which may lead Nifty towards 16,500 to 16,600 level. In the same case also, last week we have seen a long unwinding position in Bank Nifty. Although in last 1 hour's data, if you see, there is a fresh build-up of long position in Bank Nifty. So if Bank Nifty crosses that 35,000 level in coming week, there is a chance that Bank Nifty will move towards 35,500 levels. So overall, we are keeping a positive for Nifty and Bank Nifty also. In that stock specific move will happen. That's all from side. Thank you.
Thank you, Siddharth. Now let's discuss the way forward. As we have described in our strategy note and the picks in volatile time, I'm sure you have started accumulating them. Apart from this, we have started issuing long recommendations. Over the last fortnight, last 1 month, many of our MTF picks have started giving excellent returns. The list is there on the screen. Positional, cash market investment ideas and fundamental investment long-term ideas have started hitting their targets. So we will continue to give more ideas in the MTF category, in the long-term investment ideas, in the fundamental category. Do take full use of these ideas and start investing, start using them for your MTF positions. That brings us to the end of this video. I hope you like this video. You can share your comments through us by sending us an email or WhatsApp message. Thank you and have a great weekend ahead.